The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, and it is July the 2nd. Very special day in our family, and we're looking at a Dow that made a fantastic move on Friday, closed at the highs. Today it's down. Let's see, the Dow's down at 68.57. It's at 12,811. The S&P is down 4 at 1358. The comp index, if I can just move over to this chart right here, scale to the upside, move up 2,000 charts. Is that 2,000? I think it is. 2,387. We'll go to number 1. Okay, there we are. The Dow and the comp index is at 2935. Very interesting because we've got a couple of divergences going on. We'll talk about them in a little while. We've got also, I wanted to actually look at this because I didn't get a chance over the weekend. I was looking at everything else. CRY. See, this is the thing. The UTX is a stock to me that is really important. I call it my pilot light Dow indicator stock. It's acting very poorly, and the CYC, now of course I should have checked CYC. I had all my lists there. I don't see it right now. I believe that UTX should be in the cyclical index. However, it is a cyclical stock, an industrial, but it made a high. The cyclical index made a high of 1050 back in in March of this year, and it's pulled back and is hugging the 200 period exponential moving average, and it's making this H pattern in the monthly chart. Yeah, I'm kind of worried. I have a lot of divergences going on at this particular point. If you look at the NYA.X, that's 2,800 stocks. Yep, I expected that leg D on that bounce after Friday's action, which was started challenging the 7,800 peak C level. And this 200 period exponential moving average is going to be really important. And very often, the way it hugs and it tries to treat it either as a repellent line, a resistance, that is a resistance repellent line, or a support propellant line is really important. But what really happens a lot of the time is it becomes a magnet line and says until whatever you're following can decisively break sharply above that former resistance and become support, or if you're looking on the downside, if it breaks below and it cannot get above, that's going to be important. Not only that, all the charts that I've been looking at, when I was with Steve a few moments ago, he was kind enough to, I was a guest on his show. It's usually Tom O'Brien, who's on vacation, with Steve Rhodes, and I had just a great time with Steve, just a wonderful host, and I had the pleasure of being with him on the show, and he did a fabulous 9 o'clock till 10 show, so it was really a privilege. We were looking at certain charts, and I'll try to go back to them for those of you who are just tuning into my show right now. I had charts with white backgrounds, because these I would actually like you to print out. I know it's kind of tough with the black charts, you use up a lot of ink, although you can set your printer to print the other way around, but then you won't get the technical indicators showing as nicely as they usually do. So I'll get to that in a moment, but you can see the New York Stock Exchange has had a nice rally from the 7,222 low to the 678 points or something like that. But the monthly chart is still really weak, and that's saying to me that the majority of stocks are underperforming. And this is, I've said it over and over, this is it's one of those famous Wall Street expressions. This is not a stock market. It is a market of stocks. Well, of course, there's always a market of stocks, but actually, more times than not, you can go with the indexes. You can go with the Qs. You can go with the DIA, or you can go with the inverse stocks, and you'll be just fine. In this particular instance, when you can get 50 to 20 points of overnight trading in the S&Ps or in the futures, huge moves like that, and you come in the next day, it's kind of tough. I want to stick with the stocks that are acting the weakest and short them. I want to stay with the stocks that are acting the best and try to stay on the long side of them. That's bifurcated market. I love the term. They came up with it years ago. It's a split personality market. Think split personality. Don't be afraid to go short in the stocks that look to you like they are shorts and put in a buy stop. Let the market tell you. So let's go on with this. So now we've got, I'll just run these. You know what? We've got a caller on the line. I want to get this finished as quickly as possible. The Dow has made leg D up, and that's what we were waiting for. It isn't peak D until it makes the lower high bar after this. And the stochastic way down at 56%. That is not showing internal strength yet. The MACD is, it's acting very well, but it's that stochastic that I've got to watch closely. Not only that, there's a left side, right side price time match to exactly today that says if it doesn't get to 12,931, that was the previous left side cluster pattern that formed resistance, you've got to be careful, because there could be another sideways consolidation. And in fact, that's really, if you, I should have said that to Steve earlier on. When you're thinking trends, there's a time. I'm not a very good swimmer. I love diving. I love body surfing. I haven't done it for a while, but that's something I've always loved doing. I'm just a lousy swimmer. I don't have stamina. I was a sprinter in my youth. I held my high school record and the province that I ran in for my age group, under 15, under 16, 100 yards, 200 yards, and hurdles. I could not 400. Forget it. I just couldn't do it. So I know tides very well in terms of my own psyche. I know that I've nearly drowned at least 3 or 4 times. I don't mean nearly drowned. I literally mean nearly drowned. I do not have the stamina. So when I go into the water, say on out in the Chatham area, or a little further down on the Cape, there is places where you can get rip tides, and those rip tides are what can really take your life. If you get a tide, and it's just a regular old tide that's coming in, the tide's going out, that's one thing. You get the waves within that. The rip tide comes across, and it does this weird things. We are in riptide mode. Just think that. That means it's hazardous to your health, it's hazardous to your wealth, unless you put in your stops, unless you see the trend. Now you can see what's happened here. This trend in the weekly chart of the Dow is not very strong in the MACD. And it's not very strong in the slow stochastic in this weekly chart. That's always a my chart in the middle. So I'm going to go to the white charts in a short while, just because I think they might be a little easier. And I'd like, in fact, these charts I'd like you to print out just to keep there, to see some of my work, have it handy. So let me just run through the numbers now. Gold, I've just said I'm not interested in gold right now. It's in a downtrend. This is that riptide going in and out. Look at the weekly chart. A pathetic weekly chart. MACD is not yet. It's flattening out. Stochastic hasn't turned up. Can it have a pop to the upside? Oh, absolutely. Why? Because it broke down from the channel that was its friend for 2 years. It just wants to, hug it and say goodbye. I'm on my way down a little bit more. That's the way I see it. So the GLD has made a peak F-top in the ChapmanWave. To me, that is really important. And until it cracks, the GLD is at 155, down 13 cents. Until it cracks 147, I consider this a sideways move. On a monthly basis, you even on the close of the month, I don't care. You go under 148, you go into the 147s, and I've got a left side, right side price time match, which says there's a chance that we can be quite weak going into the August, even maybe even the September period. I just don't know yet. At this particular point, I have to let the prices tell me. And there's very strong resistance in the 161, the 163 area, if we can get there. So let's just go on. High-grade copper is absolutely imperative to watch. Why? And a spectacular move on Friday. It's in leg C. But this also is just not showing the kind of strength that I would like to see. I want to see copper back above 370, 380 area. To me, that was a great now we can have a tremendous bout of strength. Finally, let's just go to, not finally, I want to go to the TLT, which is really important. It's holding well. The weekly chart is making another one of those rectangle patterns until the TLT really cracks and breaks and goes underneath 124. Really, 122 would be the area that I'd be watching. Look, you break under 122, yields are going much higher. But until then, we're in this rectangle pattern. You remember, I drew the pattern. I said it looks like an H that can go to an M. When it breaks underneath the left side low of 129.34 on a closing, 124.39 on a closing basis, then you can expect that it could go lower. But until then, you can expect it bounces and bounces at a successful test. And now the high of 127.34 is the test. It went to 127.48. If it goes above 127.48, it starts leg C up in the daily, and that tells me that the weekly chart is still having a high level consolidation. So I think we've done a chunk of things. Oh, we'll just grab the dollar. The dollar is same thing, sideways consolidation, euro, EUR, USD currency pair, same ways consolidation. I'm going to grab this because I did want to do it. I hope my caller is having patience. Now, corn. I had shown this recently. I shown corn. Now, it might have been not during market hours that I just showed it in the den, but I showed that it had a very strong leg B up, and in the ChapmanWave with this kind of technique, CORN, it's not corn, this is not the futures, this is the corn contract, the Teucrium. Good grief, I've never read that. Teucrium, corn fund. I've never read it. I've always just said corn. CORN is the symbol. 43.26. Huge leg A. It's actually a leg B in the weekly chart, but most importantly, it's making a doji candle today in C, and I believe it will go to D somewhere around 44.70 to maybe 44. 44. Did I say 44? No. It has to be 43. 43.67 to maybe 40, 43.80s, 43.90s. I'm not sure it'll break 40 just yet, but so far the technicals are still very strong. And one other thing, we had a caller last week, and I said that there are patterns, and I drew this in, and I know that it looked like a butterfly pattern, but it was the DBA, and I said, I can only draw these patterns based on my work. I love, what Larry does, I love what Steve does, I love what Tom does, but at the same time, I have to use different methodology, but I can make a change to this by extending the left side, right side price time match, and that says I can get to, and I can move my triangles. I have to call them triangles. Oh, it extended way past that. So the triangle of the DBA that I had drawn matched my work, where all I did was I joined particular fulcrum points in my work, or swing points. So from the 25.70 high, low, it's made a peak A, B, C. This is leg D. It went just to almost a 27.99 resistance I pointed out last week. And what happened is it pulled back, and now it's gone to leg E. And where did I said that there's a chance, let me get rid of that, it's a bit of a nuisance. I said there's a chance that it could touch. If it broke above 27.99, there was a chance it could hit the 28.46 level, because that's the 200-period exponential moving average, and the DBA just did that in leg E. It too could have a little bit of a pullback here, but the technicals are still very strong. Thanks for waiting, Mike in Long Island. I'll be right there straight after this break, an important break here at TFNN. We always have to have these commercials. That's what keeps us going here at TFNN. Basil Chapman, be back. Dow's down 69, S&P's down 486. Be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, and we have Mike in Long Island. Hi, Mike. How are you?
Good, Basil. Good to talk with you.
Good to talk with you.
I find the Herbalife charts very interesting. Could you do a complete rundown on the daily, monthly, and weekly moving averages and stochastics?
Okay,
tell me
sure.
What you see Herbalife.
So we're looking at HLF, which is Herbalife Limited, Specialty Health Products. This is a pre-split price. It's at $48.65, or post-split, I should say, $48.65. Fascinating that so many stocks. Now, I've got it written down here. Let me see what it says here. CEO Johnson at 55.04, 8210. So it's 2010, August. Acceleration through nutrition shows and Latin America. Nutrition shows, yeah. Recruit, retail, and discounts. Okay, so what happened was he came on, he was interviewed, it must have been, I'm not sure if it was on CNBC or if it was by Kramer, whatever. I always write these things down. This is I wrote when the Toll Brothers and Hovnanian guys came on to their shows to be interviewed when their stocks were making new all-time highs. But at that point, that was the top at 2005. This is a little different because he came on and the monthly chart was hugging the 9-period exponential moving average as a support level. It was what I call walking the 9 EMA. If you look at the yellow line in the Tiger Technicians Hour, I'm going to pull this. This is the monthly chart so we can look at the big picture first. you will see it was just having a very normal rally back in the 2006, 2007, 2008, pulled back very sharply, and then began to move. And once it took out the 9-period moving average in May of 2009, remember this is a split price. It was at about, I'm showing $9, so it was $20 instead of $10. The moment it took that out, it held at 9 EMA, and that's when the fast-moving average of the MACD turned up, and very soon afterwards, in 2010, the slow stochastic held above 80%. Every book you read will say over 80% is called overbought. I say, are you kidding? You want it to stay over at 80% or higher. That's the best time you can hold the stock, above 80%. When it finally broke down, it was a warning. It held the 9 EMA. It broke down October of 2011, which hit 63.40 in leg F/B, because I had to have an alternate wave count. It was making that oval formation that I call the ChapmanWave stalk leg. It says there's a huge long leg to the upside, standing on one leg. Then there's a body formation. You get this wide, long, oval body, and you say, how can it stand like that? What happens is it makes the neck, makes the head above it, and then plop, it goes down. Normally, you would get a move into the body. If it takes out the low of the body, in this case, the low of 47.50, which it certainly did 3 months ago, that is a very negative sign. It says, yes, it can rally, but major damage has been done. And look at the stochastic is now down at 43%, and the MACD has this very wide beta, this very wide distance between the slow-moving average yellow, which is now below, and the red line. That says for the monthly to turn around and go much higher, about 54.36, which is the 9-period moving average, and hold, which will be really surprising with this kind of technical deterioration in the monthly chart. It also made a 73 round number high, which I put in bold because I've got to do that. I keep forgetting which stocks. I've written it down, but I keep forgetting. That to me was a clue. Once you see a doji candle and the high is in fact a round number, I turn around and I say, especially if it's an F, in this case it's a G/C, I say, whoa, be careful, because there's a divergence between the stochastic and the MACD. Now look what happened. In the monthly chart, in the weekly chart, there's a pattern that I call the ChapmanWave instant restart, the ChapmanWave flat base restart. It's very explanatory, but it's only explanatory if you understand the whole concept of the restart. So I'm going to make it, and it's also an unusual one. And I've spent a number of hours with different attendees of mine for the my Master Trader series, where we've gone into, I've sent them charts because they've asked about it, about the flat base restart. What happens, and basically, and especially the unusual one. And what I've found is that at a certain point, there's a chart pattern that says you've made a P. It's usually a D, but it could be an E and F. But the pattern itself says you've begun a brand new move, but it keeps coming back to the bottom. In this case, the bottom is 48.40, the low of the week of August the 26th. When it does that, it says to me, even though it can go higher, at some point it's going to make a peak D or E or even an F, but it's going to plunge and go right through that, which is exactly what it did. So that's the weekly chart. Now the weekly chart is showing a little bit of strength. I'll talk about that, and then we'll do the daily chart as soon as I get back. Basil Chapman on with Mike from Long Island. We're looking at HLF. Is this going to be a short very soon? Is it right now? Can it go higher? We'll talk about that as soon as we get back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, we are back. Basil Chapman, and also I had a question to Dan about DIG. We'll look at DIG in a moment, but I'm on with Mike from Long Island, and we're looking at HLF. HLF is trading at 48.59. I am calling this just for now leg E up with a doji high in the daily, and what I said in the weekly chart is that it had been smashed. It went from the high of 73 round number in the week of April the 27th this year, plunged down to where 42.15. Now, I do a lot of work with only a certain select candle configurations, but I do a lot of work on them. So I've only got a few. I mean, certainly I look at them all, and I can do an analysis of them, but I try to cut back, and there are certain ones that give me a lot of information. The wick, what I call a long-legged wick doji, that was formed the week of the 18th of May, 52.47 high and 42.15, tells me a couple of things. One is that it's set in place a kind of a trading band. That's the way I usually look at these things. And that trading band says, within the band, you can, here we go, you can have a move to the upside that in a shorter time frame, remember I love to look at time frames, can give you a peak D or E, maybe even an F, as it gets towards the upper part of the range. The range, of course, high side is 52.47. Well, right now it's gone to a high today of 48.99. So it is underneath that, and there's that ugly candle you can see in the daily chart. So it says to me, at this particular moment, there's still some strength in this particular move, and we're going to look at this in DIG because it also has had single leg A up. I have a technique that I call the single leg A up failure pattern, and that's basically what happened here with HLF. There was some rumor, I'm sure it was on the downside, it wasn't rumor, it was fact. Things were not as good. On the upside, it was some kind of a, it's not as bad as we thought, and there was a pop-up from the low of 42.15 on the 16th of May, a great candle on the 15th of May at 42.15, great candle on the 16th, another great candle at the opening on the 17th. It goes to 52.47. Oops, closes at 44.20. Now it's stuck. Get a new little buy signal, and it's like a mini buy mode. This stock, I believe, is going to go lower. But it was hit so hard, so quickly, that I'm quite sure that there are a lot of funds that still either want to get out, or they want to short, or reshort, or add to their shorts at a higher level. My looking at the chart says the struggle that it's had just to make this pathetic little rally, nice in percentage points, but not when you look at the chart, from 43.60 to today's high of 48.99, 5 points, it sounds like always 11%. Big deal when it's been smashed to the downside from 73 down to the 40s. I think that this... Are you short already? I know you were, right?
Yeah, no, I this worked out well, I'm sure.
Yeah, this is great. Now, this is what I would do if I was you, just in terms of... I'm not going to tell you what to do next. What I would say to you is this is what I would be looking for. If today's just the beginning of the month, and it's making a doji candle. If this is the high for this particular move, then you would see from a doji peak E that's being made at this particular point, a candle that closes lower than today's low tomorrow, even if it bounces high, even if it makes a new high, it needs to go underneath and close under 48.10. And by Thursday to Friday, it needs to break 47 decisively. If, in fact, it just meanders and it's holding, it says there's just enough room and enough strength for it to try to get to the... it was a 120-minute chart. Give me 1 second. Yeah, there's just enough room for it to try to get not to the 52s, but to 49.50, maybe 50.40, the 200-period exponential moving average. Personally, I would like to see it fail before it gets to that 200-period moving average, before it becomes a magnet and it locks in there. I want it not even to be able to get there. So now, after such a move, you might have to wait 2-3 weeks before it really starts to go down again.
Right.
But I suspect that the moment this thing, it doesn't even have to close. It just has to go underneath 42.15 in the next 2 to 3 weeks. Moment it does that, 38.52 is the 200-period exponential moving average, which is a possibility. This stock has really been hammered hard, and it's not showing much tenacity at all to be able to climb higher without a struggle. So that's my looking at the chart. I think you've got a great move. I think this is a hat-trick top. Monthly chart says it's going to be a long time before it gets to anywhere near 60. It's going to have to digest for quite a while.
Do you think we get to a D in the weekly, Basil?
Can I get to a D? That would be if it... Yeah, in the weekly, my suspicion is that it probably won't get to more than a C if it's going to stretch out over 2 to 3 weeks, that it won't get to the D, and that'll be the clue that it's weak. If, in fact, it climbs to 52 in the next 2 to 3 weeks and holds, then 54.60 is the 200-period exponential moving average, but I suspect that the candle high of 52.47 made on the 17th is going to be severe resistance. That's the way I'm looking at it now.
Great. Thank you very much. Yep.
Thank you for calling. I appreciate that. Now, folks, I had a question about DIG. Now, the DIG is the 200%. I think it's the ultra. So it's the ultra short oil and gas ETF is trading at 40.05. It's down 51 cents. Leg D, just like many of the others with that V-shaped formation. MACD is good. Stochastic's not very good at 63%. I would prefer to go to the OIH, and the OIH is the root. The OIH is the market vectors oil sector ETF. That has made a single leg A up. Now, I have a technique that I call the single leg A syndrome. And what does that mean? Very often, you will find, especially in the futures, when the 8:30 report comes out, or Bernanke Wednesday at 2:15, they give a report. You get that sudden spike to the upside, and then it just fizzles. And it turns out it's a pattern that looks, on a shorter-term time frame, it'll look like the Eiffel Tower. And that's what happened on the previous pullbacks. It went spiked up, and then it came all the way back down. Now on the 120 minutes, it's showing it's made a doji with that with a wide-legged doji. It failed to get above. It's trading at 35.56, down 8 cents. OIH is the symbol. It failed to go above the 36.55 high in the same left side, right side price time match. That means I can extend it a little bit, and using the inside wedge technique that I've developed, and that could take it to there. So I'm going to use peak A as the top. That's right there. Let's see if I can measure it out. Measure it out to there. Yep, there it is. That says it has until tomorrow or Thursday, because of course July 4th is the market. Oh, before I forget, have a fantastic July 4th, everybody. All right. Now what it says is that if the OIH is able to take out 35.94, that was the high today, in the next couple of hours, all of a sudden that diagonal trend line becomes like a magnet to the upside, as well as the 200-period moving average, which is at 36.22. So let's look at the upside potential. The stochastic's very strong and holding. Great. It's at 88%. I love that. The MACD's expanding. I love that. The histogram, you see these vertical lines? That is the way that the yellow line, the fast-moving average is derived. It's the 26 and 12. That's the 9-period differential. And then those bars there are the inside look of the high to the low of every bar between the 9-period differential, the yellow line, and the red line, the slow-moving average. And that's slipping a little bit, but still very strong. That says to me that at this point, you've got to consider that there's still strength. Not only that, you've had 4 120-minute bars. 1, 2, 3, 4. Yep. And you haven't yet taken out the lows of the gap of Friday, 35.13. So here is what I'm looking at. I suspect that 36.11, the 9-period exponential moving average, will be tested in the next 8 to 12 bars. But at the same time, if there is a break and a close above 35.94, you've got to think that 36.22 level on the 9-period of the 200-period moving average would be a target. And then the left side, right side price match says that within today or early on Thursday, there could be a pop-up to the previous high of 36.55. That's the bullish side. And that goes with the technicals being positive. This is just the 120-minute chart. The negative would be if there's a plunge and it suddenly takes out 35 and closes under 35, all of a sudden the daily chart says, uh-oh, the single leg A never even took out the high of 36.55, the high of the 20th. If it takes out 35, 34.76 is the next level. If you are long, and you're long from much lower down, I would say to you, use 34.75 as a stop, number one. Number two is, where would you add to the position? I would add to the position if it dips under 35 and then immediately, almost like the same bar within 2 bars, goes right back to 35.54, somewhere around there. I say, wow, that's nice strength. I can add just a tiny little bit, and I'll explain why. Because the weekly chart is finally showing a little bit of strength in the MACD and the stochastic, and it says, you know what? Within the next few days, if there's a nice move to the upside, for the first time in ages, it might not close above the 9-period moving average of 36.09, but it can at least have an attempt to get above it, because everything's flattening out or turning slightly higher. Monthly chart still looks terrible. Now let's look at the USO, which is oil itself, crude oil. This is, actually, I'm doing a lot of commodities today. That's Larry's purview. I'm kind of encroaching, but a chart is a chart, so I just wanted to do it. The low that was made on the week of the 7th of October, at 29.10. Managed to go peak A, peak B, peak C in the USO, that's the United States Oil Fund, LP, and then just under the 200 period. You see how important it is? It couldn't tag the 200 period moving average. Instead, it failed at peak C, and it went in a left side, right side price time match that said, I'm going to retest the low. Something happened here. Whoops, that should go to 42.07. You should go to there. That's better, okay? I like to have my charts exact, otherwise you're talking about something that is irrelevant because you're not looking at price accuracy. So the left side, right side price time match to the low of the 7th of October at 2011 at 29.10 took you to the midpoint, the week of March the 2nd at 42.30, and then, now this is something I make a big deal of. When I teach my Master Trader series, I show enough charts to say that only in crash mode. Now, crash mode could be the report that comes out at 2:15 on a Wednesday, where everything was fine, and then suddenly you get this big spike down. So it's crash mode in the very short, the near-term charts, 120, 60 minutes, 30 minutes, 10 minutes, etc. Or it could be those monthly charts we were looking at in 2007, where the monthly was in crash mode, but you could never see that kind of thing in the dailies because it just kept making lower highs and lower lows, lower highs and lower lows. So the pattern I always say is that we do go up in the same amount of time, very, very often, to coming down. And this is exactly what's happened. We came down, in fact, just in a little, like 1 week shorter, 2 weeks shorter, and it came down in a very gentle move. The crash mode makes a difference. We went up in the same way, left side, right side price time match. When we went up from the high that was made back in the week of the 6th of May of 2011 at 45.60 down to the trough D. Remember troughs, the lowercase troughs on the downside? At 29.10, the week of the 7th of October. Then you went up and failed at that peak C, but it was almost in the same price time match. So you can see so far, except for that very ugly candle, that was crash mode for the very short term, the week of the 6th of May, everything's been very smooth. And that says to me that something's going on in crude oil that is pervasive, that is really what you're looking at, the tide, because the monthly is saying, hey, I can't do anything else but make that dreaded H pattern, and I've repeated it again, and if at any point the USO breaks under 29.10, that's not very far, it's only $1.50 away, that monthly chart says, watch out, we could be going down to 22.74. That to me would be a huge market negative. Hey, it might be good for the airlines on a 1 week basis. But if crude oil really drops like that, this is just my opinion, then I think that's a real problem. And my gut feeling, my technical analysis says that it's a great possibility because those H patterns are really powerful, lowercase h. So unless crude oil in the next 2 weeks can snap and really break above 32.77, I would say 30. So here's the question: what should I do if you are in the? We were looking at DIG. So one is crude oil, the other are the oil and gas. Those are the integrated oils assessors, the kind of different chart patterns. But I'm looking at this. I want to look at it. The USO says single leg A up. Got to watch closely because if the USO starts to break from here, breaks under 30.50, it could come down with a single leg A very sharply and then maybe try to retest the lows. I'm watching this very closely. So I thought I'd do that. And what you really want to see, if you are long, you want to see a snap to 32.03. Has to be by Thursday afternoon. Folks, Basil Chapman, 877-927-6648. We'll be back, and I'm going to show some of my white background charts, which I hope that you have a chance to print out.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find find an invaluable tool to help me analyze the potential of the market each day. It gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi everyone, my wonderful engineer Al says, yeah, you got these black charts and the white charts, and then we can let viewers take a poll on which they think looks better, the black or the white background. For printing, I love the white, but actually black gives me a lot more information, number one. Number two is, I've got thousands of charts plotted in ChapmanWave on black. I don't want to have to redo, and I really only do this to show. I mean, I don't personally need these things. I see it in a split second. So anyway, so let's look at this. This is the cues on the weekly chart. What I've got here is a little Fibonacci extension from the low of 49.93 to the high, the peak C, C1, C2 double top pullback, and C1, C2 very often goes to a D. And what does it do? It goes to an expansion just under 200% with a doji high and a silent doji before it. This is on the weekly chart. Right there at the 68.55 level. Now it's pulled back, and there are a lot of bars underneath this maroon 9-period exponential moving average. Now, what's really important is you've also got the pattern that I call that falling axe. Remember that expanding ice cream cone on the downside? if in fact the Qs take out, really not just take out, but decisively take out 64.57 and go to 65.60, let's call it the high of this doji candle here. Yeah, 65.07 into the 65.30 area. All of a sudden, I have to say, you know what? I've got this one-to-one possible expansion. We could retest the previous highs. Look at the MACD and the stochastic. A lot has to happen. It can happen, but a lot has to happen for the stochastic to go from 40% all the way up to 80% to be able to sustain a move. So with the weekly charts are the ones that are the most telling right now, because they're the ones that need the most improvement. If you look at the S&P, SPX.X, that's how I get the S&P. Oh, I haven't finished the S&P. Did I do the SPY or did I forget the S&P? Oh, I haven't done that. All right, doesn't matter. If I go to the Dow weekly, you will see it's the same thing, that I've got a pattern that's unfolding, and within this pattern, I've got the stochastic flattening out at 53% and the MACD not really turning up. If it does, if the fast-moving average crosses positively, there's no question in my mind that we've got to think of a V or a U-shaped pattern that's going to retest the 13,338. So now in the remaining time, what I want to do is this. I'm going to talk a little bit about how these patterns repeat and what you can expect. You see the way the Dow went to a peak D back in the week of the 6th of May last year, 12,876. Well, it plunged down to 10,404. And then what happened is a new move that went to peak A, B, C, D, pull back. And then it went to a leg E up at 13,338. But look at the difference. The stochastic was way down in the 75% area. And the MACD, the fast-moving average, couldn't even deflect higher. It just kept going lower against that red line, the slow-moving average. So that told me that we've got to expect downside action. But all of a sudden, we've got an up channel with an inside track, the ChapmanWave inside track, and that says that's your containment area. So it's very clear to me, on Friday, if the Dow closes underneath 12,000, I wish I could see it because it's been covered, 12,700, that's the 9-period exponential moving average. There's that pattern that I talk about that keeps repeating over and over, that H pattern, the dreaded H, and I'll draw it in. If in fact it then continues lower and it tests the most important, oops, I'm moving things around here, I didn't mean to do that. Oh, running out of time. Well, if it breaks, I'll make it real clear. If this week the Dow cracks 12,600, be really careful. If in fact it closes above 12,950, hey, there's a good chance the 13,000s are going to be tested and we'll go there for a little while, maybe a week or two. So I'll be back on Wednesday. Thanks for being here. And I won't be back. I'll be back on Friday. Have a great